What up? What up? What up? Can I give myself a little bit round of applause?
You're exclusive.
I love them all. It's so hard to picture. So it's like trying to pick a child, a favorite child.
I also believe that everybody is special. And that's the thing, discovering what makes you special and different from everybody else.
So,
Whoa, that's $8 to $10 million a month.
it was more than that. It was a lot of money. And, we had a lot of perks. And I had over 300 gas stations that I operated.
Hello, Tom LeVecchia here with the New Theory Podcast. Today, we got a very special guest. Josh Finkleman is here, managing partner over at CBC, Colorado Blockchain Capital, the first crypto or digital or blockchain, he's going to explain, a hedge fund out of the state of Colorado. Josh, welcome to the New Theory Podcast. How are you doing today?
Tom, I'm great. Thanks so much for having me on the podcast today. I really appreciate it.
Okay, it's our pleasure. Okay, so there's a few different threads I want to cover here. So let's keep it simple. First, we all have, I guess, a basic understanding of blockchain and technology, but give us what a crypto asset first is.
Sure. So crypto assets are, and it's a complicated question, but for the most part, you're looking at blockchains, which are decentralized digital ledgers. Okay.
Correct.
And so these cryptocurrencies, the underpinning technology is what's called a blockchain. And owning some of these tokens, you actually own kind of units on that ledger. So if you will, kind of digital equity ownership in that particular blockchain. And depending on the blockchain, depending on the token, it might have a multitude of uses.
Wow, okay, you actually broke down a complicated subject and made it simple. So you guys went the next step and said, hey, we want to create an investment vehicle, aka a hedge fund, to put together these assets and make it investable. So walk us through how you guys came up with the idea, and then what does it look like today?
Oh, man. Well, this is an entertaining story. I use the term hedge fund loosely in the sense that the fund that we launched, it mirrors kind of what most people would convey a hedge fund in the sense of the structure and the fees and what have you. But really, the fund is more of like a venture capital fund, right? It's an early stage investor capital or a VC fund, if you will, and we're investing in early stage blockchain technology startups, if you will. Okay. So VC funds, they will have a basket of investments that they hold, that they're early stage investments that they hope at some point down the road will yield back, profitable returns back to their investor group. So we're in essence doing the same thing. And we're investing in the tokens themselves, right, which represent these blockchain-based projects. Let me kind of rewind the clock a little bit, and we can chat about my history and kind of how we got here. And it's an interesting story. I started off in accounting and finance, kind of CPA, master's in finance, and worked in corporate America for 10 years, and then went off and kind of started my own company and staffing and built that up and sold out of that partnership in 2007, and then just went on to do a couple of other kind of entrepreneurial opportunities. And then one of those opportunities was a credit card payments company out of Denver. And it was a fledgling credit card payments company, and actually a good friend of mine at the time made an early stage investment in that company, and the company was struggling, so I ended up going over there to see if I could make sense of it and turn things around, and ended up staying on as the president for the better part of 7 years. And so through that experience, I learned all about payments, right?
Okay.
I learned all about fintech and banking and processing and a lot of the ancillary businesses associated with that, like point of sale systems and payment gateways and what have you. And so it gave me some unique optics when I stumbled across blockchain technology, because the technology is very payment centric. Right?
Okay.
A lot of the technology right now is being leveraged to reduce intermediaries within the payments realm, speed up transactions, reduce friction, lower borders, and dramatically enhance transaction times. So as I was running that company in 2013, a really good friend of mine told me about Bitcoin. And
Okay.
like probably most initially, I was very dismissive. But he was so adamant and passionate about it. And so I told him I would take a look at it, and I did. I started to do a deep dive on Bitcoin and very quickly connected the dots and really saw the enormity and the potential in this technology as it applied to payments. And then you could expand that out, and I realized the enormity of how blockchain technology is really going to be disruptive, not only in payments, but banking, remittances, stock exchanges, supply chain management. I mean, really so many different industries are going to be impacted by this technology that I just was hooked. And I was a believer. And so I on kind of my spare time, I read everything I could get my hands on it and started investing in Bitcoin initially, and then expanded out into Ethereum but it was really kind of my side hobby, right? My passion, if you will, as I was running this payments company. And then in 2016, I decided to take a year off and leave that company and think about my next iteration. And in the tail end of 16, I really, that adage of do what you love, right? And so
Sure.
I thought, what do I love? I love cryptocurrency. So I'm going to really start to just do a deep dive and really expand out my holdings and actively manage my portfolio. And in January of 2017, it marked the beginning of an outlandish bull rally in
Correct.
the cryptocurrency market, right, from January through June of 2017. And during that time frame, my personal portfolio went up over 11,000%.
Wow.
Wow. So
Okay.
I was a believer. That was it for me.
Yeah.
And so midway through that, I had the epiphany of launching Colorado Blockchain Capital. Launching an investment vehicle so that people can come in and start to invest in this asset class and understand it and what have you. And we started putting together the framework in March of 2017, and then fast forward in July, we launched the fund. And so it's been really exciting and a fun ride ever since.
Okay, so at this point, I think people are, kind of either in or not in they're in on blockchain technology, cryptocurrency, I guess, obviously some of the divide, but having those type of returns are going to make a lot of believers. Let's kind of cut to it in terms of what retail opportunities exist from an investment standpoint with CBC.
Well, listen, what's so amazing about this technology is it allows the retail investors to participate in something prior to that really was only enabled for institutional investors, right?
Correct.
Wall Street and VCs to get into these early stage companies and make investments and bets that, if they were successful, would yield just tremendous returns. Well, due to the tokenization of these offerings and digital exchanges being built out around the world, any retail investor can sign up with an exchange and take part in this. Right? They can make these early stage investments in this. So it's just really a fundamental shift in investing in early stage startups in a new space that I really believe is going to be as ubiquitous as the internet, and we're early days. So it's just, it's a really amazing opportunity. And what's very interesting is the total market cap of this space across close to 2,000 different cryptocurrencies is about $335 billion. Most of that is retail investment, or people like you and me, right, around the world that have just been signing up on these exchanges and buying up and taking some ownership of these digital assets. So it's really tremendous. And so what we offer is is my knowledge base as an expert, or pseudo expert. I don't know if there's really any expert per se in the space because it's relatively new, but somebody who really has a good track record of managing investing in this asset class. So what we're doing is on an institutional kind of professional level, we're allowing investors to come in and offer an exposure to this new asset class.
Beautiful. And then in terms of where you are similar to a hedge fund, you kind of follow, and again, if you're open to disclosing this, kind of a 220 model in terms of pay for performance.
That's right.
Would that be a fair statement? Okay.
That's right. That's exactly right.
Okay. And then bottom line is if you perform, you do well. If you don't perform, you don't. We like to ask some direct questions. Yeah. We like to ask some direct questions here in the podcast. So if you invest, what type of gate is there, or is there a gate on my money?
No. Well, so you have essentially a 12-month lockup, right? Okay. So you come into the fund on the first of every month, and then you have a 12-month lockup, and then thereafter you have kind of quarterly redemptions thereafter.
Okay, so very similar to a hedge fund. And then what about in terms of, obviously it's still new, and then you obviously want to share and be transparent with your clients, but at the same token, you don't want to give away your strategy. So do you guys share, what do you share with your clients in terms of, reporting and what's invested in?
Sure. Our partners have monthly statements that they'll get after the end of each month, and then we'll do a kind of a quarterly call with all our partners and do a deep dive into the fund's performance and the tokens that we own and what have you, and do a Q&A after. So we really try to, it would be laborious to have that level of transparency every month, but we try to do it at least every quarter.
Love it. Okay, so before we conclude, what excites you most about CBC right now?
Just the enormous opportunity. And it's not so much in CBC, it's for people to invest in a brand new asset class, right? And in technology that is in the, kind of the early beginnings, much like investing in internet companies in the early 90s. Right, where ultimately, fast forward over a period of time, you have a new industry that takes root and is formed, and you have, giants that come out of that, like Google, Cisco, Sun Microsystems, what have you, and investing in some of these tokens is the equivalent of investing in those early stage companies year 1 or 2. Right, to where the upside is outlandish. It's just incredible. Now, granted, over during this early stage time, though, it's extremely volatile. Right, these token prices are very, very volatile because you have roughly a brand new asset class, a new industry that's taking root. There are a lot of market inefficiencies. You have very little regulation around this. Really in the grand scope of things, you don't have a massive amount of liquidity because you don't have a lot of institutional players yet in this space. So as a result of that, you have a lot of volatility because mostly what we're experiencing are retail investors that really are uneducated on the underpinnings of a technology and where that technology is going to go. So a lot of the investment today, they're coming in because they hear their brother or their uncle or their friend made money investing in cryptocurrencies, and they just ride that wave. So you get these rallies that just are tremendous, followed by these massive price corrections. When the price starts correcting, people panic and they sell because they're just uneducated about the long-term fundamentals of the value proposition of this technology, and they're just looking to make a quick buck. Now, that over time is going to change. Right? Over time, people are going to understand the value proposition in this technology, much like, how we finally understood the value proposition of the internet. And more money is going to flow into this space. Institutional money is going to come into this space. You're going to have a regulatory framework around this space, and that volatility is going to ultimately subside. But in the early stages, that volatility is where you can make a lot of returns for investors. And that's what people like myself are leveraging.
Okay, so where do you stand now? Are you currently taking money in? Are you close to, kind of fulfilling your first round? Where are you at for the person who wants to click the link that we'll provide and possibly invest in cryptocurrency and with CBC?
Sure. Yeah, we're in our we're still raising our first fund, which is going to be open. We can have 99 participants in the fund. They have to be high net worth individuals. And so we are going to keep the raise open until we fill those 99 slots, at which point we'll close the first fund, and we're already talking about opening up a second fund that's more of a traditional VC fund, where there's a longer lockup period and where that fund is relatively illiquid, and we're making early stage traditional venture capital bets in blockchain infrastructure companies. Right. Whereas the fund that we have right now is very highly liquid. So you can, get into positions and out of positions relatively quickly because we actually hold the tokens themselves. And we right now hold about a basket of about 28 different tokens within our fund.
Would it be fair to say it's somewhat of an angel strategy where you might look into 20 different situations and, you're not expecting much of a team, but one may be like, 300x. Is that it, or is it more moderate across the board?
No, I think you're right. I mean, we approach this like a venture capital would, because really these are very early stage startups that we're investing in. All of the tokens. I mean, Bitcoin came out with a big, Satoshi Nakamoto kind of came out with the Bitcoin white paper in 2009. So really, which kind of started, right, this new industry. And for a long period of time, really Bitcoin was the only cryptocurrency out there. And then with the advent of Ethereum in 2015 and these tokens being able to launch on top of Ethereum, this kind of ecosystem exploded. So really what we're doing is we're acting as a venture capital in the space, and we're investing across a breadth of different early stage startups in the blockchain space, full well knowing that a lot of them might go to zero, right, ultimately, but that we hope that we have one or two Googles, if you will, in the portfolio, which those returns offset the losses that we've had in our portfolio. Of course, it's my mindset that I really feel we're going to have several winners within our fund. It won't just be one, because this is my core business. And so we have a team, and we're reading and researching, and we're embedded in the community. And so we're hearing about, what projects are successful and what projects are not, and we can adjust the portfolio accordingly.
I absolutely love it. All right, Josh, how can we find it? How can we find you?
Yeah, so the easiest thing to do is go to our website, which is www.coloradoblockchaincapital.com, and there information that you can read. There's an email page. You can also write us at ir@coloradoblockchaincapital.com, and we'd be happy to share information about the fund with you.
Love it. Thanks for being on the show, Josh, and have yourself a great day.
Appreciate it, Tom. Thanks again for having me.